Hi, everyone. Welcome to the day 3 of the Fibonacci and Elliott Wave 2022 conference, brought to you by FX Traders Edge, TradeOutLoud and TimingResearch. I am recording each of the presentations, and they will be on TimingResearch.com as soon as I can get them posted. And these presentations are for educational purposes only, and trading might not be suitable for all people. Please consult a financial advisor and only trade with money you can afford to lose. And now I'm going to turn it over to Markus.
Wonderful. Thank you very much. And here, that's me. Wonderful. Good morning, ladies and gentlemen. And first of all, let me say thank you to David and Anke that I can be a part of this wonderful and great show. I'm a little German guy here among of those awesome and incredible speakers and trading this awesome show. So thank you very much that I can share my knowledge and insights with you. So let me say hello to the listeners tomorrow morning here. I can see San Jose, Florida, China. That's lovely, wonderful. Good morning to Toronto, Africa, Lafayette, Poland, and I have just followers here from Germany also here, Austria. Nice to have you here, guys. So yeah, this is a special topic. Normally, I guess you can expect some strategies, some kind of secret strategies or most important strategies. My teaching style is a kind of different. And I don't talk about myself, so my introduction is really small because I want to talk about you and your struggling problems, all your trading problems you are struggling with the whole day when you sit in front of your screen. So therefore, I've chosen this topic, how logic could change your trading forever. So the next, around 55 minutes, we want to talk about your brain. I want to talk about a strategy which could help you to become successful on a long run. This is really important. So, and I can see your comments and questions here in the chat. If you have any questions, then please feel free. Don't hesitate to ask whatever is in your mind, because we can talk about almost everything. Okay, so first of all, as David mentioned already, general risk warning, you are responsible for your own trading. This is just educational point for educational purposes only. So, is there something interesting about me? No, not really. I'm the German guy. I'm a trader, 24 years almost right now. I'm a full-time trader. I trade for an asset management. I have my own company, Know-how Trading, where I actually support 100 students in person with every daily chart trading and day trading, and more than that, supporting my lovely students, because to be honest, I love all my students, because I know everybody is fighting for its dream to become successful in trading. So before we start, because now it's 4 o'clock my time here in Germany, it's afternoon. And this morning, or a couple of hours before, I heard the first speech from Monday from Anke. Awesome speech. And she said, we all fighting in front of the screens. We are sitting in front of the screens, and what the heck I should do right now? Where is my damn signal to get into the chart or to get out? Yeah, it's always this point, and it's always this, this inner fight. What should I do with this trading? And then here we come to the first point. What does the term logic, where does the term logic come from? The point is, our brain is not made for trading. Of course not. Because we are built in a different way in our mind. It's completely different. So you learn something new, it's kind of exciting, then you do always the same, and then the routine comes up. Hi, Lionel from Canada. Nice to have you here. Then your routine is there. And then you do always the same, and you don't feel any anxiety or something like this, because you do always the same and everything is fine. You stay in your comfort zone. And then you come to trading, and there is no comfort zone at all. There's everything, but no comfort zone. Why is it? Yeah, you're on the right edge of the chart, and there is no comfort zone because you don't know what happens next. So, and then your prefrontal cortex is getting overwhelmed. Why is it? Your prefrontal cortex can handle 4 thoughts at the same time, no more, no less, just 4. And trading gives you so many information at the same time. The chart, the news, your educator, whatever there is. And then it's getting overwhelmed. So, and when your prefrontal cortex is not working anymore because you're getting overwhelmed, then the next stage is coming up. And this is your limbic system. And in your limbic system, there are placed your emotions. And if your emotions come to the leading point, there is no logic anymore. Then you feel greed and fear and all these stupid things you do in front of your screen, getting out, jumping in, jumping out, and in the end, you don't make money in trading. So therefore, we have to talk about logic, because if you have some people around you, they talk to you, if you make trading, you have to turn off your emotions. If you hear something like this, someone is talking this to you, then you know this is not a real trader. To be honest, it's not a real trader, because you are a human being. You are a human being. You cannot turn off your emotions. It's not possible. You're not a robot. There's a button you can turn off the emotions, or you have a chip for your emotions, like data from Starship Enterprise. You can pull off your other chip, the emotion chip. It's not possible. What you have to do in trading is to control your emotions. So how do you control your emotions? Just only with your thoughts, just only with logic, because scientifically proven, every emotion, any emotions, a thought is going before. So first you have the thought and then the emotion. So where does the thought come from? From outside, from your body senses, your eyes, your ears, your tasting, whatever, your smelling, yeah, or your feelings. Then if you realize it with your awareness or with your subconsciousness, it doesn't matter. First the thought and then the emotion. So can you control your thoughts? You can control the emotions. It does not matter which strategy you work in trading, with Fibonacci, with Elliott waves, but whatever there is, you need to control your emotions. So therefore, we have to talk today, and I'm so happy that I kind of start this day, the 3rd day here. Where does the term logic come from? It's a Greek word. It's the origin in Greek, and it means logos. And a kind of thinking, it's an art of thinking. Logos is the original word of logic. So, and it means reasoning. To think reasoning. So let me ask you a question. You can type the chat box yes or no, for example. So if I ask you, would you say you act in trading reasonably or more emotionally? What do you think? So type in the chat box. I can see it, yes or no. So would you say in person for yourself, your own trading, would you say you trade all the time reasonably or more emotionally? Please be honest to yourself, because it's very, very important that we talk about it. The more honest you are, the better it is, because lying to yourself, it's not the best thing. It's planting bad seeds for yourself. Yeah. If you say both, you're a really cool guy. Yeah. But you say most of the times, it's less reasonably, it's more emotionally. But if you say both, then you have a problem, because trading is a game of math. And I want to show you today, in my speech today, how you can do this. And with kind of strategy, it is much more easier to do this. Yeah. Reasonably, because I always trust my way, even if I'm wrong. Okay, great for you. As long as you're profitable with your style, everything is fine. That's really cool. So let's go. Emotions should not influence your trading. And this is my sentence. This is a sentence I create for my community. Emotions should never at all influence your trading. And I want to show you why is this so important, that emotions should never influence your trading. So check this chart, and maybe you can give me an answer. You see the right edge of the chart. Would you say long or short? Maybe type in the chat box, quick. You have 3 seconds. You have now 10 seconds. My teacher told me if you open the chart, you have 10 seconds to see what's going on there. So what do you say? Let's go long or short? Long or short? What would you say? You see the chart. You have 10 seconds right now. You have to make a decision. It's 1 minute chart. You have to go long or short or both, whatever it is. What you say? So yeah, you see there's a question about time frame. That's really cool. So long, short, both. Okay, you see, there is no answer at all. Yeah, there is one is at short. One is asking what time frame. Yeah. So another say support is there. You realize what's going on there? Now we are 100 participants. Oh my God, that's a bunch of numbers. I'm really happy. Thank you very much that you spend your precious lifetime with me. So point is, now we are 102 guys here, and they're watching the same chart at the same time. And we have different answers to the single one question, what's going on, long or short? And we have different answers. So where is the logic? And this is what we have to figure out. So first of all, guys, we have to make a big decision, and we have to make a big difference. Are you an investor or are you a trader? It's completely different, guys. Investing is completely different to trading, because an investor is investing in a specific product. And like a little bit the left picture from my side, the left one, the plant is like investing. You plant a seed and you expect that it's ripping up at any time and it's growing over the years. So you know Warren Buffett. Warren Buffett were investing in Apple years ago. And I guess I saw last time some numbers from him. Is always in his portfolio, the biggest part is still Apple. I don't know, 79% round about this. I don't know right now. Who cares? So he's investing in a specific company, firm, or product. This is investing. It doesn't matter when you buy. It's important that you have a product where you're absolutely convinced that it's a big advantage for you over the next years. It doesn't matter if you invest in energy or in a specific product like gold, silver, whatever there is. Now, no one cares. But this is investing, and this is a setup. This is an approach over the next years. But here we talk about trading, and trading is different. Trading is not investing. So first of all, you have to make for yourself this big decision. What do you really want? Do you want to make an investment, or do you want to be a trader? That's completely different. So in this speech, we want to talk about a trader. If you're interested in investing, then it's another webinar, another time, another day. We talk about real trading. So first of all, it's a fact that trading, the pure trading, is a zero-sum game. I'm not sure if you ever heard this. Trading is a zero-sum game. Therefore, you cannot compare it with investment. If you're investing in a share, then you are expecting it's growing up for the next years, and you get some dividends and something like this. Pure trading is a zero-sum game. If you want to buy, for example, 2 futures, Dow Jones, whatever, then you need someone on the other side who sell you 2 future contracts. So now you have 2 and the other one is 0. So pure trading is a zero-sum game. It's a fact. And this you have to realize, because this fact leads to a specific consequence. There are winners and losers on both sides. So if we come to trading, and once we realized it's a zero-sum game, we must realize it's math. Zero-sum game means it's mathematic. And in this picture, 1 plus 2 is 3. I guess you know this. If you can count to 3, you are a happy guy. So 1 plus 2, 3. In trading 2, nah, unfortunately not. Not in trading, not at all. In trading, sometimes 1 plus 2 is 5. And sometimes 1 plus 2 is minus 3. And sometimes it's 0. If you think about this, and if you realize this, then it leads to completely different thinking about pure trading. Because let me go back to this one. I ask you on the right edge of the chart, long or short. And in this moment, something happens in your brain, in your mind. You see this with your eyes, and in your mind, there is open up a specific seed, which is planted any time before, which means this is your perception. It's your own individual perception. And as we realized here, we have people that said long, other traders said, no, that's short. Another said, what time frame? What is this for a question? My question was long or short, not what time frame. But you see, it's your own perception. So now we have a problem. How can your own perception ever lead to an advantage in trading? Because you are the one and only who see this and you say long. But at the same time, another trader, maybe in Toronto or in China, is checking and looking at this chart at the same time, exactly the same chart, and he says, no, it's short. So who is right? Who is right? You or the guy in Toronto, or maybe the guy in China, or in South Africa, Mozambique, wherever they were sitting around? Who is right? And that's the big question. It's your own perception. And your perception does not matter. No one cares about your private perception. But based on this, we have trading. Because if all traders would say long, how could we trade? It's not possible. It's not logic. You see, because you need buyers and sellers. So that's kind of confusing. Now we have to bring the logic into the chart. Yeah, that's the point. So zero-sum game. We're talking about mathematics. So the point is, we are on the right edge of the chart, and there we're getting confused because we just see the history. We can have a look back in the chart. We have whatever time frames you use. We have different approaches. We have different expressions of the chart. But you're on the right side of the chart and you don't know what's coming next on the right side of the chart. You don't know. If you say, I know, yeah, then you can go all in, right? And if you see, and if you hear sometimes people online, they say, we knew it, that it happens, then I give you one question. I give you one question, you can destroy the whole trading business. If someone talking to, yes, we knew it that this will happen, then you can say, ah, so you went all in. Most of the times the traders look at you and say, oh, you crazy. I never go all in. But you said you knew what happens. If you knew it, then you can go all in. And then with this one single question, you destroy all these stupid things. Because when we talk about mathematics, we need to figure out what's about analysis. Analysis, guys, ladies and gentlemen, any kind of analysis is not mathematics. And if you are a real trader, then you have to go under the law of mathematics. Mathematics in trading is a law. It's not an option. It's logic. Why? You have buyers and sellers. I show you right now. I show it very soon. Analysis is not mathematics. So for example, we had today in Germany, 2 hours before, we had ECB rate decision. So they rose 75 points up, 1.25. So I can check the chart. It's going up and down and up, and actually at the end, nothing happens. So what's going on? Yes, the algos were there. They traded up and down because they were programmed to do whatever they want to do. Yeah. And people now, they're doing their analysis about that stupid number, 75 pips. It was expected. So the market expects this. So now it happens right now. 75 pips up, for example, an ECB rate decision. So now people start doing their models, to doing their analysis, German bank, whatever, around the world, millions of people, they are trading Euro USD, for example, they're starting their analysis, but this is a private thing. It's an individual thing. Whatever you think about this 75 pips up, points up for the euro, it's just your analysis. If there were an ultimate analysis, there would be no trading anymore because you need buyers and sellers. So different people have different perceptions. Analysis, ladies and gentlemen, analysis is not mathematics. It's a private opinion. Otherwise, you could not read different newsletters about whatever there is. So now here we go. So what we can do, how we can transfer this knowledge into real trading. First of all, you have to accept this. So if you come to a chart, if you open any chart, the first thought must be in your mind, okay, it's my perception. It's just my perception. There is a trader anywhere on this planet Earth. So maybe I'm sitting here in front of my screen and I'm checking Euro USD. So, and David, I don't know, he's sitting in New York or wherever, is checking the same chart. And he's thinking, Markus, are you stupid? It's long. So, and Anchor is sitting on her desk and he said, you're both crazy. You're idiots. You cannot trade. We do nothing. So you see, 3 people, 3 different opinions. Why is it? Yeah, because I'm checking the 4-hourly chart. And David is checking the 5-minute chart. And Anchor, for example, is checking a weekly chart. So it's different, completely different. So you see there is a support in this chart. Ah, yeah. How many people see this support? Just you? Yeah, maybe a couple of others around. But you see, it's perception. Ladies and gentlemen, with perception, you cannot make money in a game of mathematics. Analysis is a perception thing. It's not math. So what do we see in trading? I show you. So I show you this one. So you see, for example, that's an order book. It's actually from FTEX. It's the order book. On the right side of it, you see the order book. So how many columns do you see there? How many? So I can see, type in the chat box. On the right side, you see the order book. How many columns do you see there? Yeah, not rows. How many columns do you see there? Type in the chat box. 1, 2, 3, 4, 5. How many do you see? Yeah, how many columns do you see here in the order book? So you see exactly, you only can see 3. So I can see 3 too. So let me check it for you. You see 3 columns. So what's in there? 3 numbers. 3 numbers. In the middle, the price. On the right side, sellers. On the left side, buyers. Volume. So you see 2 numbers, the price and the volume. Here we go. That's all about trading. Oh, that does not mean you have to read the order book. That's not the sense of this topic. The sense is that you realize in your mind when you check the chart, everything starts and ends in the order book. It does not matter which product you trade around the world. If you talk about the FDAX, there is one FDAX on this planet Earth, one original FDAX, one order book. It does not matter where you're sitting, where you're placed, in China, in Toronto, in Germany, in Poland, in some Mozambique. If you trade DAX future, you have to go to this one order book. And there are just 2 numbers, price and volume, over and out. Question, can you type in there your name? Can you send your name? Can you send the reason why you want to buy or sell to the order book? Can you do this? I'm trading for 23 years now. And when I open in my broker platform, I open my display and I want to go long or short, I type in 2 numbers, the price and the volume. And this I send to my broker, and both are in this order book. And that's really logic. That's pure logic. That's logically, guys. Everything starts and ends in the order book, over and out. So afterwards, one step further, there is the so-called time and sales list. The order book, and many people used to say, oh, the order book is manipulated, everybody can manipulate. Of course, yeah, that's true. And you do also. You manipulate the order book too. Interesting, right? How do you do this? Well, for example, You have an open order, pending order in the chart anywhere. You want to limit order, whatever there is. And you send it to your broker, and maybe it's a real trading, like in futures, for example. Then it's in the order book. Your order and your amount and the volume is in the order book. And 2 minutes later, you realize, oh my gosh, I was wrong. I was wrong. Oh, I was wrong. Then you delete the order. And it's going out. Now you manipulated. Now you have manipulated the order book because it was in. Exchange could see it. All traders could see it. And now you pull it on to take it off again. So you manipulate the order book. So that's not the trick. Everybody can manipulate the order book. It's not manipulation in a bad sense. It's normal. You send the order there and you can take it off again. You can put it away again. No one cares. But afterwards, here we go. That's the time and sales list. And there is nothing to manipulate anymore. The time and sales list is like your bill, the slip you get at the cash out. For example, you go to a grocery, you buy some milk, you go to the cash out, you pay, then you get your invoice, then you get the slip, the bill, and there are numbers on it. How many, what time, which product, what price, over and out. Then you leave the grocery and the trade is done. It's over and out. No one cares what you do with the milk on the parking place outside there. If you throw it away, if you spend it, whatever, no one cares. And exactly in trading is exactly the same. The moment there is a price and a size, trading is over. It's done. Over and out. Everything what was before leads finally to this act. Whatever you see in your chart, whatever you draw in your chart, Fibonacci, Elliott waves, whatever there is around, if you draw lines or whatever, who cares? No one cares. Leads to exactly this point. Does not matter if you trade in real market, Forex, futures. It doesn't matter if you can have an insight in the order book, like in futures, shares, or there is an over-the-counter, like in Forex. There is always an order book. Without an order book, it does not matter if you have insight or not. There must. Because trading means buyers and sellers, so there must be an order book anywhere. Doesn't matter if you can see it or not. So the end of the game is exactly this point. There's a price, there's the size, how much we are sold right now, and what time. That's done. That's all. At this point, ladies and gentlemen, trading ends. It's done. The job of the exchange is to keep in balance supply and demand. If this point is done, trading is over. Now you might say, yeah, what's about the charts and what's about the lines and the indicators? No one cares. At this point, trading is done. It's over. Really, it's over. Because the exchange does not care what you do now with these numbers. No one cares. Because the job of the exchange is to keep in balance supply and demand. And if they set a new price based on volume, the task is over. The job is done for the exchange. So what you see here in the chart right now, it's the so-called tick chart. It's the visible legacy of the order book. So one sold, 1 point here is 1 tick there. So, and by the way, one was asking about the time frame. So show me the time frame in the order book, please. Can you show me the time frame? Yeah, there is a time exactly, but the time stamp. Do you see a time frame there? Ladies and gentlemen, Albert Einstein has proved it. There is no time. Time does not exist at all. You have to understand this. Trading, the real trading does not work with time. So maybe you might you ask, where does time frame come from? I can tell you from you. It's just your perception, because you can set in your chart whatever you want. 1 hour, 2 hours, 2 minutes, 3 minutes. No one cares. It's just up to you. Time frame does not exist. There is no important time frame. Maybe there is a valuable time frame. Yeah. Okay, in a daily chart, it's more content than in 1 minute chart, but forget it. There is no time frame. So here we see that's the game of math, and that's trading. And you have to understand, the moment the exchange set a new price here, trading is done. It's over. That's pure logic. And what you do right now with these numbers, it's just up to you. Your private decision. If you have a chart, if you use normal candles, if you work with Heikin-Ashi, if you work with lines, with Renko charts, point and figure, whatever there is around, or if you draw something beautiful girls in your chart, no one cares. Therefore, it's your perception. And you have to understand this, because this is the most important thing. We trade with 2 points, price and volume, over and out. What you do afterwards with the numbers is just your perception. That's all. That's all about trading, guys. So now we have to see the question. We have to figure out, how can I make money in this game of math? How does a trader earn money? I have you this picture, and I mentioned this grocery. So how does the owner of the store make money? How? You know that. It's simple, because you know that from your normal life. You know the owner of the store makes money because he bought the product cheap and sell it to you more expensive. The moment you go with your product through the cash out and you paid your product, who makes money? Exactly. The owner of the store makes the money, because he bought cheap and sold it to you more expensive. That's the nature of trading. Ladies and gentlemen, please, in heaven's sake, you have to realize this. You are a trader. You are the owner of the store in this moment you come to trading. The point is, most of all traders have no own business. I have my own business. David has his own business. Anka has her own business. We know what it means to buy cheap and sell expensive, but most of traders are employees. They make their job 8-5 and get the money at the end, the salary at the end of the month. They don't think about like a trader. Therefore, it's a big problem, because now your brain is not made for trading. It's not made for trading. So which means you have to create in your brain a new landmark. And this is the real challenge in trading, because a trader makes money with buying cheap and selling expensive. And this symposium here, you get a lot of content, how you can do this with Fibonacci, with Elliott waves, whatever. My teacher taught me 20 years ago, Markus, make it as simple as possible. Why do you should work with any line, something like this? Find the cheap price. That's the point. So where is your mathematic edge? Now we figured out there is a price. No, nothing more. In trading, it's a game of mathematics. It's a zero-sum game. If you want to win on a long run in a zero-sum game, you need a mathematic edge, and your perception, your analysis is not a mathematic edge. So where is your mathematic edge. So there's a kind of song. I sing it every day to my students. If you have no guarantees, you have to work with probabilities. Yeah, you can repeat it. If you have no guarantees, you have to work with probabilities. Because if you realize, okay, that's just the price, how you can influence the price? How? Yeah, you saw it in the order book, just by volume. So if you want to make sure with guarantee that the price is working for you, for example, you want to buy and you want that the price is going up, what you have to do? How do you can influence the price with guarantee? How? Volume, just only volume. You can pray, you can scream to the chart, you can yelling at your wife or your kids or whatever you do, you can scream at the trees in the forest, whatever you do. You can do nothing that the price is working for you unless you're the big guy. You have the volume. Then you can influence the price. So, yeah, if you don't know, if you are not the big guy in trading, if you're not the bank, if you're not the huge trader, yeah, then you're a private trader, right? You're a private trader. You have to work with a mathematic edge. So if you have no guarantees, you have to work with probabilities. And probabilities are never 100%. This is why we traders struggling with this stupid trading stuff here, because we want to have the 100%, but there is no one. There's no holy grail, guys. Yeah. Oh, by the way, there is a holy grail. Yeah, there's one. And the holy grail, yeah, it's you. You are the holy grail because it's in your hands. The success of trading is in literally in the palm of your hands. So where is your mathematic edge? If we work with probabilities, there is a math, a positive expectation amount. So, and that leads to, what's the secret word? That leads to rules. Exactly. And in this wonderful symposium, all traders tell you the same stuff. You need, in God's sake, rules. So why? Yeah, it's pure logic, because you're engaged in a game of mathematics. And if you need a mathematic edge, you need rules. If, then, cause, effect, karmic principles, universal law, cause, effect, rules, if, then, and analyzing, perception, predictioning is not a mathematic edge. That's not rules. Do you know what rules? Golden cross strategy. If the 50 moving average crosses the 100, this is an edge. This is a strategy. Oh, when Anchor, for example, is talking about Fibonacci, yeah, if the price is coming down to 38%, 61, and there you have a turnaround, this is your mathematic edge. And that's rules. If, then, that's rules. And no one else. And with nothing else, you can make money in trading. Just with this principle, if, then. And for that part, you have to work. And this is what I tell you, what I'm going to tell you, my people, all day long. Did you make your job last month? So, quick story, funny story. At the end of the month, my students must send me, all of my students must send me the result of the trading month. And I want to have two results: all trades and the result without any misdeeds. Because I hate the word failures. We don't fail. We make misdeeds because we missed to do the right deeds. Therefore, it's misdeeds. Guess what? Guess how the result is look like without mistakes. 99% of all results are positive. So what you have to do as a trader, you have to do your damn it job. That's all. Not guessing, not analyzing, not interpreting. You have to do your damn it job. That's what you have to do when you have your rules. So strategy, rules. You will find millions of strategy. In this great symposium, you will find a lot of strategies. Fibonacci, Elliott waves, whatever there is, I don't know all that. So why are 80% of all traders are not successful? Why? We have hundreds and hundreds of webinars around all day, and still 80% of all traders fail. Why is it? They don't make the job. Yeah, they don't follow the rules. Why? Emotions, limbic system, overwhelming of the prefrontal cortex. Therefore, we need logical thinking in trading. And you know how you can do this? There's a wonderful and lovely word, and it's called watchfulness. Repeat it. Watchfulness. Keep calm. Musa. Stay calm. Go away. Go one step back. Think about it again. Are the rules there or not? Or are you in emotion? Oh, what should I do? No, watchfulness. So I give you another wonderful, lovely strategy. It's the Dow-Howe principle plus trend following. In USA, we have wonderful, or you have wonderful trend following force. Mulvaney Capital, Dunn Capital, all of them are extremely successful. Do you remember the turtle traders in the 80s? Most successful traders ever. Trend following, most successful trading strategy ever. So what's the Dow-Howe strategy? It's a combination about the perfect know-how about the Dow strategy. What's the Dow strategy? It's 150 years old, this strategy. Charles Dow Edward Jones figured it out 1879. When they checked the blackboard at the wall where a young man is standing on the ladder and writing with a white chalk the numbers at the black wall, and then there's a did you see this? You can make money with a cheap price, buying cheap and selling expensive. Ah, now I got it. 150 years old. It works all the time. So what you have to do, this is your mathematic edge. Ladies and gentlemen, this is your mathematic edge. If you find the cheap price, do you see a time frame? No. Time frame does not exist. It doesn't matter. You can do it in 1 minute. You can do it in 5 minutes. You can do it in whatever, up to weekly chart. I trade for an asset management for my clients, trade in weekly chart. It's awesome. But you have to find the cheap price. So the hit quote, the positive expectation value is about 70%. That what happens? That you get the price and the price is going up over the last 0.2 or the last high point. Yeah. And if this happens, then you have a positive hit quote of over 70%. This is enough to make money in trading. But what you have to do, you have to find this cheap price, which means you have to make your damn it job. Guess why so less day traders make money with trading? They cannot make the job. Because in 5 minutes, signals are around all day long. If you are a part-time trader and you have a normal job, and you say, now I come home at 5 o'clock, maybe now I have 2 or 3 hours time to make trading. You really think so? You will fail at all, because you cannot make your job, because you miss too many signals. Because in the law of probability, there is another law. You know the other law? Coincidence. The other law is the coincidence. So that's the point. With this 70% hit quote, you have a guarantee that you can make money in 70% of all cases, but not in 100%. So, and now here we come. Here we go. If you take all signals, you have a kind of guarantee of 70% that you can make money, but not with every single trade. But in the single trade is included the law of coincidence. So how you can make your job? Because I said, you know, the karmic principle, if then. So what's the rules? I can see this chart, yeah, and you can check the chart, yeah. So what's the rules? You want to see the rules? I give you today the rules, because it's not a secret. It's 150 years old. So that's the rule. Sorry, that's the rules. Rule number 1. A valid trend is needed. Rule number 2, entry between trend on number 2 and 4. You need a cheap price. Rule number 3, it's kind of familiar with Fibonacci. Correction has to be more than 38%, that the price is really cheap. And if you see the correction, wait for the rebound. For example, in Heikin Ashi with a balance candle, for example, yeah. And you know what means WWW? It's not World Wide Web. In trading means waiting, waiting, waiting. First, you have to wait if the rules are there. Then you set your order, and then you have to wait if the rule, if the trade is going on or not. And once the trade is open, you have to wait again. So just a quick example here in my chart, you see this is US dollar Japanese yen. You see the trend entry here mid of August. Here it's still going on. Here another trade in daily chart. Australian dollar, New Zealand dollar. I opened the trade here. You see last year in November, and the trend is still going on. It's running. And you see that's kind of results, for example, almost 30% with my running trades. It's a simple system. It's just really, really simple. Is it easy? I remember when I was a part of this symposium last time, Anka taught me this wonderful point. Simple is not easy. The strategy is simple, but trading is never, never easy. Why is it not easy? Because you have to make your job. So, and it does not matter if you trade in 5 minutes or in 50 minutes or whatever there is around, there is always a trend. And now you know why we have such a law of probability. And you see, we have awesome probabilities, over 64% with a breakout strategy. And trend on number 2, ladies and gentlemen, we have a probability of almost 99, over 99%. And you see how many trend arms are going on? So the point is, if you want to catch the 17 trends, they're working more than 10 trend arms, you have to catch the first trend, the first one. And this is why you have to make money. That's kind of, you see, that's kind of examples here. And this is pure trend following. It's simple. It's really, really simple because it's based on logic, pure logic. Trading is a game of mathematics, no more, no less. Is this learnable? Yes, thanks God. I have a different opinion about trading because most of my colleagues, especially here in Germany, they say, no, you cannot teach trading at the university. I say, yeah, you can. No, trading is a kind of art. No, I say, it's not. Because mathematics is not art. Mathematics, it's logic. And trading is mathematics. That's the point. It's not art. That means, ladies and gentlemen, today, your chance, absolutely your chance. If you listen to all my colleagues today in this wonderful symposium, you can learn trading because it's a craft. It's not art. It's a craft. But you have to make your job. You have to be willing. You need the will, the power to make your job. You need this discipline. You need this persistence. And you have to invest. What kind of investment? Maybe a little bit money for a mentorship, whatever there is. You have to feel comfortable with it. If you don't like the guy who want to teach you, you learn nothing. Believe me. Believe me. If you hate the guy because he's an idiot and he has a wonderful strategy, you don't learn it because you don't like the guy. So you have to feel comfortable. You have to like this guy. You have to call him, something like this. You have to investment lifetime. If you try to figure it out on your own, you will waste a lot of lifetime. If you want to save lifetime, and guys, we just only have this one life, one, and we don't know when it's over. Maybe tomorrow is our last day. We don't know. So in heaven's sake, please don't waste lifetime. Learn this job. This is what you have to do. Yeah. The success isn't just in your own hands. If you plant the right seeds, you will have the perfect results. It's literally in your hands. We work in trading with logic. We work in trading with cause and effect. And if you plant the right seeds by doing your job, you know the result? Wonderful trading success. Part-time trader, full-time trader, whatever it is. But in heaven's sake, do your job. Plant the right seeds, and then you can work with cause and effect. So today, at the end, I'm done. Yeah, go to the homepage if you want, how-trading.com. I make you a discount of 100 euros for the online logic course with this code Fibonacci 2022. It costs 899 with 100 discount, 70.99. You can pay in some 3 installments, whatever there is. If you want to trade with logic, I want to welcome you. And I want to say thank you that you listened to me, that you had your attention. I wish the rest of the speakers a wonderful day and you a lot of success. And as always, I finish all my webinars with the same speech, the same sentence. Have courage and be kind, and may the force of the logic be with you. See you next time.